for neighborhood preservation to discuss the housing study. So today we have Councilor Schultz, Councilor Majoke, Councilor Green, and Councilor Peniagua, and myself, Councilor Allen. And Michelle, what we'll do is we'll just have you start. You can introduce your colleagues here at the table and then kind of give us an overview. If you don't mind, I would like it to be a little informal because the packet is so thick. I don't want anybody to lose their track of thinking and questions. So if it can be kind of informal, if we do have questions right on the spot, we can just go ahead and ask. Is that okay?
Certainly.
All right, thank you.
Good afternoon, councilors. Michelle Spansky, Deputy Commissioner of Neighborhood Development. I'm joined here by Charles Buki, Pete Lombardi, Larry Weston, and Lauren Holm from CZB Consulting. They've been working with us since October on our citywide housing study. So as a part of that project, we've undertaken a number of different data analysis, stakeholder working groups that we've been meeting with, representing the full spectrum of stakeholders from affordable housing developers, market rate housing developers, neighborhood advocates, workforce development and education folks. And then additionally, as a part of this, we have completed a full residential survey of all 35,000 residential parcels in the city, which is the vast majority of our about 40,000 that we have kind of overall. So I'm going to turn it over right now to Charles and Pete to tell you a little bit more kind of about where we've landed, and as Councilor Allen said, feel free to interrupt at any point.
Okay, yeah, thanks, and good morning, councilors. We have just a quick slide show prepared here that'll provide an overview for the document you have in front of you. This is a document that is now accessible to the general public at SyracuseHousingStudy.org. And we had an open house last night at the Northside Learning Center, an open house tonight at the Southside Innovation Center that presents similar information. So what we want to do here is spend the first few minutes of our time with you talking about kind of the process that we took to arrive at this document here in May, and then we'll provide you with a basic overview of the two parts of the document that you have in front of you, and then we'll be happy to answer any questions after that or during if there's any reason that you want to interrupt and sort of ask questions about specific content. So the purpose of the Syracuse housing study, as I know staff have briefed councilors on before, is really to provide a foundation of information so that the city can begin the process of developing a citywide housing plan and strategy. So we've been focusing our work on really building up the foundation of data for strategy development going forward. So this is a document that does not have prescriptive recommendations at this stage. It does not lay out a strategy for housing in Syracuse. It's really that foundational set of data to understand what's happening and how to approach strategy development. And as Michelle said, 4 working groups have been guiding us throughout this process, starting last October: an affordable housing working group, market rate housing, neighborhood quality of life, and workforce education folks who sort of bring a perspective to housing needs in Syracuse. So we've been tapping into those working groups throughout this process, as well as an internal committee from within City Hall, as well as partner agencies. This is just a quick timeline to show kind of how we've approached this work since last October. We started out with kind of a discovery phase where we did a lot of our research, including that field survey of residential property conditions that Michelle mentioned. We've been meeting with staff on a regular basis throughout this process. You can see on this slide where we've had touch points with our working groups. This week it represents our 5th engagement with those working groups. And then we had public events at the very end of February, beginning of March, to present preliminary findings, and then we have that open houses last night and tonight to present where the draft is now. So the document that you have in front of you is divided into two parts. The first part that we call central findings is structured the way it is because as we were gathering all of the data that the city was providing us and analyzing it, we recognized early on that basically every housing issue that you can identify in the city of Syracuse, whether it's blighted conditions, lack of affordable opportunities for a lot of households in the city, lead contamination, you could identify kind of almost literally hundreds of distinct housing issues that Syracuse is confronting, and we could see that you could categorize almost all of them into one of two categories. There were some market gap problems that the city is confronting, and then there are affordability gap problems. So part one really is about defining what does the market gap in Syracuse mean, what does it look like, what does the affordability gap mean, what does it look like, and what are some implications for developing responsive strategies. So we kind of have, this is an example of a graphic from the report where we really try to define in as simple terms as possible what is the market gap, what is the affordability gap, and it really comes down to the kind of the simple fact that what it costs to generate and maintain housing in good condition in Syracuse exceeds what a lot of households are able to spend on housing. That's the affordability gap. And it also exceeds what many households in the city and in the region are willing to pay for housing in Syracuse, given their levels of confidence in the future of neighborhoods within the city, and also their confidence in the housing stock, given decades of deferred maintenance that is visually apparent in many of the city's neighborhoods. So the document spends some time defining, in various ways, what is this market gap? What does it mean? What is the affordability gap? What does it mean? But this is kind of the crux of it.
Can I just ask a quick question?
Yeah.
So how long does this data or assessment last? Like, is this a 5-year projection? Because obviously inflation and everything else will come into play at some point. Like, does my question make sense?
Yes, yeah. So I think the way to think about this is that this report does not actually make any, it doesn't include any projections. It doesn't make any assumptions about what things might look like in 5 years or 10 years. This is really focusing on what is happening today and what has been happening in the past 10, 20 years. So it's sort of it's a combination of looking at a trend lines, but especially looking at where do things stand now, especially that point in time assessment of existing housing conditions in the city. That reflects kind of the condition of structures as of fall 2022, beginning of 2023. And we kind of use that to sort of try to create a baseline of this is where you are now, this is what's happening, and you can assume that certain patterns might remain in place unless certain things are done differently. But we don't, this study does not speculate like where the population might be in 10 or 15 years, because you can engage in an exercise like that, but there's so many variables that are hard to predict. So we really kept to trying to keep it simply what is happening.
And what are the factors that got us here? And
Yes.
so identifying that affordability gap is really something that the city needs to do on their own, area by area, right, to address.
Yeah, so it's sort of defining what the affordability gap means citywide right now, like, based on the latest data, how many households are cost burdened, but also looking within the city, how does that affordability gap look in different neighborhoods? Where do you have wider affordability gaps, narrower gaps? So it's really kind of diagnosing what's happening now.
Right now, okay.
Yeah.
Before you go any further, I want you to talk a little bit about the engagement, the working group that you had put together. What's the makeup of them and all of that? Could you talk a little bit about that?
Michelle?
Yeah, so as far as kind of all of the members of the working groups can be found listed within the front page of your document that's in front of you if you're looking for particular members. So as Pete mentioned, we convened a total of 5 different working groups. So the first one being of kind of cross-departmental within the city, but also several county representatives of more kind of staff members as a steering committee of sorts. We additionally convened affordable housing developers, so think Home Headquarters, Housing Visions, Rescue Mission, folks like that. Market rate development, a number of those folks that are doing kind of larger commercial projects. Neighborhood advocates and quality of life. I think that was probably one of our largest groups. So looking at kind of a lot of different folks that maybe are not working in housing themselves, but the work that they do is very much impacted by what's going on within the state of housing. So anywhere from kind of people with disabilities, New American and Refugees, Volunteer Lawyers Project, all of those folks. So, and then lastly, employment and workforce development. So anyone that is kind of impacted by, obviously, everyone needs somewhere to live, right? So not necessarily in the housing game, but they're still very much kind of a part of what the underlying economics are and conditions. As in terms of kind of what the process was, I think we were really relying on those groups to be kind of a temperature check to make sure that the data that we were collecting really matched up with kind of lived experience of what everyone was seeing from their various lanes kind of on the ground. So basically each session that we had a total of 5, the last one being completed with kind of the formal presentation yesterday to just really kind of, as data was coming along, kind of have some conversations around what does this mean, like does this make sense within what you're seeing. So
All right. So within this framework of describing the market gap and the affordability gap, you'll see in the draft that we kind of further break it down to telling some stories about both of those gaps at the regional level, because obviously the city's housing is within the context of a complicated regional housing market. So we kind of have some regional storylines. We look at things at a citywide level, and then we drill down to looking at housing submarkets within the city. So we have findings related to those 3 geographies for both the market gap and the affordability gap. The market gap stories you'll see for the region, we identified early on that even though if you look at Onondaga County, if you look at the suburbs, it will look on its face that the region's suburban communities are doing relatively well compared to many of the metrics that you see in the city. But we could see when we put the region within the context of national housing trends, that actually the Onondaga market, the central New York housing market itself, is fairly soft in terms of how much value and price appreciation has occurred in housing over the past 20, 30 years. And so we think that an important part of understanding what's going on in the city of Syracuse is understanding that the region as a whole has relatively soft market conditions that have led to decades of disinvestment and deferred maintenance, not just within the city, but also broadly within many suburban submarkets as well. So that's part of kind of the regional story that we tell. From a citywide standpoint, we show data that reflects some pretty long-term disinvestment in city housing, and we use the field survey data that was gathered last fall to really crystallize that story. So one of the key findings is that 1/3 of all the residential properties in the city right now show very visible signs of deferred maintenance based on the sidewalk assessment that was done by surveyors last year, and that's not something that has happened overnight. Obviously, that is decades of disinvestment, decisions to withhold maintenance, either by folks who just aren't confident in the city and have withheld maintenance for that reason, or from property owners who aren't able to invest in their property because of physical disabilities or just lack of income. So that's kind of a citywide story that we tell. And then we also look within submarkets. We show a map of market strength across the city. Where do you have relatively strong levels of housing demand in the city? Where is it kind of in the middle? Where is it weaker? Just to sort of reflect that it's a complicated city of very distinct markets where things can change. And something that we found very interesting, market conditions can change almost by crossing streets in some cases, where you go from one very different type of neighborhood to another neighborhood almost just like that. And that's something that has to be part of the strategy development context.
Does age play a part in this market gap? Meaning we have a lot of homeowners in the city of Syracuse that are older, so they aren't currently working, they are on fixed incomes. So were you guys able to see the difference between like the age of homeowners within the city of Syracuse versus like out in the suburbs? Like a lot of younger people are moving out to the suburbs, but a lot of our homeowners are older on a fixed income. So were you guys able to draw a correlation between that?
Well, I think that's a great question, and I think what's interesting is that both the city and the suburbs right now are dealing with that challenge of having a fairly large share of homeowners over age 60, 65, 70. And so those are households that are dealing with the exact issue that you addressed, having restricted incomes, and maybe, homeowners in their 40s and 50s tend to be the biggest spenders on home improvements because they have the income, and they also they plan on staying, so they want to make it what they want to make it. But as you have older householders, you just you see a pulling back in almost any market type. You see folks less readily investing in new kitchens, new bathrooms once you hit a certain age. And so that's certainly a factor, we think, in many Syracuse neighborhoods, as well as the suburbs. You have maybe a neighborhood like Meadowbrook or Eastwood on the east side, where you have relatively strong single-family housing conditions. But from conversations we had, we gathered that you have a lot of homes in those neighborhoods that really haven't seen a lot of internal upgrades in a long time. Mm-hmm. So when those homes hit the market, you have maybe younger buyers that are looking at them and thinking, okay, there's not only is there the price I have to pay for this, but how much am I going to spend to bring it up to what I want it to be? And does that make any rational financial sense to invest that much in that property in that neighborhood?
With the green bathrooms and wood panel walls and
That's right. Exactly.
Yeah. Okay. Thank you.
You don't have any avocado rooms in your house? The affordability gap, it's kind of the similar structure. We go through kind of telling a regional story, citywide story, and sub-market stories. And of course, the big thing on the affordability gap is just the income disparities between the suburbs and the city. That's really critical context. And you also have significant income disparities within the city, from your stronger neighborhoods to many of your weaker neighborhoods. And that has an impact on levels of affordability across the city, across the region. Within the city, we kind of quantify how many households are receiving some form of assistance right now, according to HUD. It's like 7,600 or so households that are receiving vouchers to help pay for housing, that have an apartment within a public housing complex or live in like an income-restricted apartment complex run by a not-for-profit. That's a big number, but it dwarfs the total number of households that really need help in the city. So there's a big gap between households that need help paying for housing versus those that are actually receiving some form of assistance. And so that's a big part of the size of the affordability gap, is that chasm between levels of help available and the levels of help that are needed. And within your submarkets in the city, we kind of point out a paradox that the neighborhoods in Syracuse that have the biggest affordability gaps are also the neighborhoods that have the least expensive housing, because you've had over time concentrations of lower income households in the neighborhoods that have the least expensive housing, but that's still too expensive for a household that's only making $15,000, $20,000, $25,000 a year. And so they are burdened living in the least expensive neighborhoods that also have the poorest housing conditions, and so that's something that's quite apparent in the numbers when you look at affordability gaps across the city. This is a diagram that's on page. Let's see exactly what page it is on. Page 37 of the report. And this is, we conclude part one by just drawing attention to the fact that while the market gap and the affordability gap in Syracuse represent very distinct housing problems that require very distinct tools and strategies, they have a huge impact on each other. And that one of the challenges with developing sound strategies for a city like Syracuse is that if you're making progress on your market gap, you risk widening your affordability gap at the same time and losing ground there, and vice versa. If you're making good progress on your affordability gap, in some cases you might risk widening your market gap. So a careful balancing act that has to take place when it comes to doing good strategy is just recognizing that and trying to balance your simultaneous work on those two fronts. And the strategy guidance part of the document, part two, lays out some what we think are some foundational steps for getting that balance right.
So I want to make a comment on that.
Yes.
I was speaking with a friend of mine over the weekend who's a developer. Thank you, Councilor. Who's a developer, and one of the things that he raised was, he said, Joel, we recognize the struggle in the city in terms of housing, and he said, as a developer, it is so hard for us to be able to balance building and renovating and then looking at the end of it, because you want to build and at least make maybe few pennies here and there to be able to have a reason why you're building, in which this a lot of people are looking forward to this study to really see what does that entail, what are their options, what's out there to be able to balance that, especially for those developers that want to come in and renovate and be able to help as well. So it's such a difficult position to be in, and as the studies say, housing is getting older, and it need more renovation, and not a lot of people are out there to do it themselves. They rather have somebody do it and be able to get on maybe on a mortgage end and be able to but at the same time, it's so high to be able to afford it, and so it's such a dilemma here, and I think this housing study, with whatever suggestion it can suggest, I think both from the resident side, from developer side, people are looking forward to really see what's really out there, because this city is drowning. It's drowning.
I think that this calls out pretty clearly, obviously, that challenge that you point out, Councilor Majuk, just understanding that the math for whether you're a homeowner or a small developer or a large developer, the math just simply doesn't shake out. We're very aware, I think, as within kind of some of the preliminary recommendations here that that's a challenge, particularly for some of the small local landlords. It's not a thing that we currently have a program here locally for, at least at any kind of mass scale, and part of that goes back to the fact that a lot of the programs that we do have when we're looking in terms of overall housing investment are constrained by federal and state regulations that require different levels of affordability monitoring, and so when we look at kind of like, we've been trying to max out on using those resources as best we can, and the reality is that those constraints put a lot of, in some ways, even more barriers on those folks. And so, yeah, to your point, it's a huge challenge, I think, as far as kind of identifying what those strategies look like and what we might be able to do moving forward. It's definitely something that we're committed to, and we'll talk a little bit more about kind of once we wrap up with main findings. But
yeah, and that's actually a good segue to the part 2 of the document, which is divided into 4 pieces, 4 pretty simple pieces. But the first one is I think the most important, I think, for the community to be thinking about, and it's really recognizing that if you want to achieve really different outcomes in the city over the next 10 to 20 years that are a significant pivot from what the city has achieved on the market side, on the affordability side in the past, it is not a matter of tinkering around the edges. It's not like, oh, there's a state or federal program that Syracuse just hasn't been tapping into or something like that. It really requires a transformation in the way that the community thinks about housing strategy, and thinking about new resources, new types of programs, and really making a hard pivot from business as usual, kind of the traditional programs, federal and state funded over the past several decades.
I would underscore that. There is no state or federal program in existence in America today to tackle the market gap problem you have, period. And the state and federal programs that are in existence today that have been designed to address the affordability gap are so poorly designed, generally speaking, as to worsen upon their deployment your market gap problem.
Adding to it.
So you've got a big financial gap challenge ahead of you that will not get solved by Albany, is not solvable by Albany, will not get solved by Washington, is not solvable by Washington, and can only be solved here.
Can I ask a question? I don't know if this relates to what you just said. On page 7, focusing limited resources around community strengths for maximum, what's a community strength?
We would defer to you, but we would also expect in deferring to you, we wouldn't be surprised if you said a university, a hospital, a community center that's really well regarded by residents, a social club, a particularly prized park, a place that the community has come to love, cherish, and take care of, right? And tends to take care of, right, by itself, is already showing that it takes care of it. Right? It's not waiting for Albany to take care of it. It's already being taken care of. It is an asset in its own right.
So it's a place and a thing, not necessarily the people that are
Can be the
doing
people.
the work.
Absolutely can be, and often is. It's the social capital that's wrapped around taking care of that.
Okay.
And just to add to that, you know, last year I looked into housing deeper, and as you know, as Syracuse is a unique space, you know, across the nation, it's housing stock is getting older, and it's becoming difficult to have good, decent, quality housing, and you know, as a country, as a government, federally, we haven't really done much, or more than 30 years, to really do a major investment into housing. And when you do that at a federal level, it's You know, it doesn't solve all the problem locally, but it helps. It helps. But so yes, we do need locally to strategically think about how we address this and help ourselves. But at the same time, you know, our federal government and partners got to show up for us to be able, because we can't keep putting Band-Aid on this issue. It's just it's not feasible. Right.
Yeah, no, I think that's a great point. And one way I think that'll be important to think about strategy development is that you know that Syracuse will be getting millions of dollars for the foreseeable future every year from HUD, from the state to sort of help with housing issues. And as poorly designed as many of those programs are, it is within Syracuse's power to be thinking about, if you know those resources will be coming, how do you invest them as smartly as possible to really make as much of a dent in that affordability gap as possible, and then thinking on top of the resources you know will be coming, how do you supplement that with a wider range of locally derived resources to leverage those other resources and to sort of tackle some problems that you haven't really been in a position to tackle because, you know, there is no federal or state program for it, and you know that at this point that it's probably doesn't behoove Syracuse to wait for that state or federal program to materialize. So I think it's a big part of thinking about future strategy. It's not it's not sort of looking past the state and federal resources of like figuring out how can you do better with those resources and then go on top of those and supplement them in a way that really supercharges the investments that you're making.
I think it's really important to kind of acknowledge that what we've seen over time is a continual decline in the amount of resources that we have available from HUD as a part of our entitlement dollars. We've gone down in the last 10 to 12 years from over 14 million to just under 5 million with CDBG. So I think the community can be really proud of how much we've been able to scale impact with those dollars, thanks to a lot of the work from home headquarters and Housing Visions and agencies like that are out there doing that work. We've really done a lot with exceedingly smaller and smaller amounts, but I think to Pete's point, like there's always going to be a value for what those dollars enable us to do really well, but it's just that they're only solving kind of a portion of the challenges that we have right now, and so we need to kind of additionally figure out what we can do to kind of close some of those other gaps.
And I think some of the kind of the general guidance that we have in part 2 here that you see on this slide, that second item especially, using blocks or groups of blocks as the core units of implementation, we think that's a way that that Syracuse can figure out how to use existing resources or anticipated resources better and layer on top of those resources new strategies, new tools to achieve progress, not just one property at a time and in a sort of a scattered fashion, which has been the tendency in basically every city like Syracuse, but to think much more strategically about how do you take an entire block and figure out, you know, based on who lives on that block now, the pattern of ownership on that block, what do you need? There might be a need to do 2 demolitions. There might be a need to assist 7 homeowners with some home upgrades. There might be a need to partner with 6 landlords on some upgrades, to have interventions with specific households that are struggling. And it's kind of almost like a case management approach to understanding what's going on this block and the adjacent blocks, and what are the necessary tools for stabilizing and sort of putting it on an upward trajectory. That's not how housing strategy has really been done for the most part in the past. I think there are some successes in Syracuse you can point to where you've come close to kind of being patient and thinking holistically at the level of entire blocks, but usually a tendency we see in a lot of places is you don't do it long enough. You may be there for a couple of years and then there's impatience. you want to sort of shift assets around or monies around, and then you pull out too quickly, and you begin to see backsliding, and you never quite see the needle move like you would like to see. So we think that that's really a key part of being very different, of doing different housing strategy going forward, is thinking very focused and strategically like that around community assets primarily.
So Michelle, you're on that track right now with the infill construction, but do you feel like for us to do this throughout the city, do you feel like MBD, you have the capacity to kind of do this like citywide? Like I know we're over on the south side, we're over on the west side, but realistically, within the time frame that this administration will be here, like how does that look?
So I think kind of the principles and how you think about the investment, like I think that that's something that can kind of carry over. Like a lot of the work that we're doing today is stuff that is kind of groundwork that's been laid 10, 12 years ago, kind of that's gone across multiple different commissioners and deputy commissioners. I think that, I guess what I would say to kind of expand a little bit on what Pete was saying in terms of what we've been doing a little bit more differently locally. I think the Woodland Baker Garfield project is a really, really great example of we did really clustered new infill housing construction. The gaps that we still have there are for all the other properties that are nearby, where it's maybe a rental property or it's a homeowner who needs more upgrades than what a $3,000 SHARP grant can cover, right? And so it's sort of figuring out what can we do to currently, it would depend on kind of how you define capacity, right? Like we have the capacity to administer something like that and get those, identify what those case situations are that we need to be able to devote some resources to, but we do not have the resource streams right now currently that allow us the flexibility to do what we need to do to kind of close all those different gaps effectively and get to the idea of what a really comprehensive redevelopment looks like that kind of meets all of those different needs.
When you say resources, obviously that is a long list, right? So it's money, it's people, it's expertise, it's all of that, right? So even where there is no money, like you're at the city for a block, you might be able to bring in your planning expertise and maybe recruit some local developers or businesses to help fund. So.
Yeah, I think where I would say kind of the biggest thing that that is the most challenging to think about kind of closing the gap on is where can we find some unrestricted funding streams to be able to kind of.
He cringed a little bit. I want to know what the cringe was. You got to tell us.
There is no magic fairy dust of money.
Yeah.
Okay? So banks aren't going to give you money, developers aren't going to give you a slice of their profit. It's just not going to happen.
Yeah.
Okay? That's it. You have to grow your economic engine, and then you have to extract value that you create and then put it back into your neighborhoods. Right? There's no going to the bank and saying, we'd like a little bit of cut, we'd like a slice of that. Right?
Gotcha.
There's no going to the developers and saying, you know, we'd like, let us get a slice of your after-tax profits. Not going to happen. Okay? You have to meet the market where the market is, right? And make it work for you. And what that's going to leave you with the city with median incomes here, new construction costs here, right? Rehab costs here is a big, giant gap you got to close. Then you have to look to the general fund in your annual budget and say, what can we cut in order to grow something else someplace else? That's it. If housing is a priority, that's how you're going to do it.
And I thank you so much for that. I want to stay on this topic in terms of, especially as we talk about helping ourselves. Has there been an area, as you do this study and observation, has there been an area where you feel like we have been impeding our own selves as a city in terms of laws, in terms of regulation, to really maximize that, at least to maximize where we are trying to go? Have you seen that at all? Has there been that observation as you studied this?
I don't think we can point to like specific regulation or laws that are kind of holding you back. I think a lot of. I think one problem I've been able to recognize is that and this gets back to like where resources are currently coming from, is that there, in many cases, there might be expectations for how or for what resources can actually do that are misaligned with what they're actually designed for. So one example, and this isn't a perfect housing representation, but I think it's related, North Salina Street, a corridor that got revitalized streetscape-wise probably a dozen years ago, decade ago, something like that. That is a corridor that I can imagine. I'm from Buffalo, and so face many of the similar challenges that Syracuse faces. And I think in many communities there's an expectation that investing in infrastructure, investing in streetscape, especially going from like a 1970s highway streetscape to something that looks more neighborhood friendly, that can be a catalyst, and that can transform the business environment on a street, that it can begin to transform the neighborhood around it. And I think North Salina is an example of how that's not sufficient, and how it's necessary. It's a necessary step to take, but I think if there were expectations that streetscape work on its own was going to, like, all of a sudden re-energize business investment, re-energize neighborhood investment, I think that expectation has been shown to be false. And that part of thinking at the block and group of block level, thinking about focusing on community assets, it's focusing on an area like that and thinking, yes, we need to have a higher level of infrastructure, maintenance and materials to sort of create more pride and confidence, but what else is needed to give businesses confidence in that strip, to give homeowners and landlords confidence to invest in the housing around there, especially with St. Joseph's Hospital nearby. That's a key asset. So I think part of going forward, if you wanted to think about how do you take North Salina, which today, if you go there after 6 p.m., it's a ghost town. It looks nice with, it's got nice street lamps, it has nice sidewalks, but it's a ghost town. So if you don't want it to be a ghost town, if you want to see investment on those streets around it, what is the fuller set of strategies that you need to bring to bear in that area that are, infrastructure related, business related, housing related, and recognizing that a big part of having a more successful commercial street is having more households with more incomes, and embracing that diversifying the income profile of every neighborhood in the city is a key to actually having more vibrant, amenity-rich neighborhood commercial districts. And not shying away from the idea that increasing incomes and making that neighborhood desirable to households who are currently not choosing it, making it desirable so that they choose it, they bring their discretionary income there and create an opportunity for businesses to establish there and thrive. That's all part of this more holistic way of thinking about thriving neighborhoods and healthier housing stocks.
So with that, and I'll be quiet. With that, how, and it's a great point, how do you, from a perspective of housing, how do you create something like that without opening doors for gentrification?
I think that it's having, to speak to like the affordability gap and the market gap problem, it's thinking about within the context of a given geography, what are the market gap tools that you can bring, and what are the affordability gap tools you can bring at the same time? So you might have a combination of tools where you're helping first-time homeowners with a home purchase, but also serious home upgrades to overcome decades of deferred maintenance on some single-family homes. That could be one intervention that's really aimed at that market gap issue. On the affordability gap side, you might have you might be able to identify a range of good landlords in that neighborhood who you can partner with, help them upgrade, make those upgrades that you were talking about, where like good landlords who would like to improve their housing, but don't want to they don't want to go too far because they know that households in that neighborhood won't be able to afford what they would have to then charge in rent. If you can find those landlords, work with them to upgrade their housing, and then support them in a way that allows them to keep their rents at a certain affordability level, you can have your market gap intervention, you can have your affordability gap intervention simultaneously and try to figure out that balance within a certain geography. But that does, as Charles alluded to, there are not traditional resources that Syracuse has been working with that can be deployed in that kind of creative way. And especially on the market gap side, there really is no set of tools in Syracuse that have been used to help households that wouldn't qualify for traditional HUD or state housing funds. You're talking about households that might be making $50, $60, $70, upwards of $100,000. Does Syracuse have the appetite to identify those households as key targets that you want to keep in the city and investing in the city, and is there an appetite to set aside funds to assist households like that in finding housing that they want to live in so they can set down roots and be major contributors to their neighborhoods?
But to your point, Shoal, for instance, I'll give you an example. Some of the homes that are one-family homes that are being developed in the south side right now, so the cost of developing these homes is somewhere around, approximates of course, 300, 350. And then to keep it affordable, you cannot sell beyond 100, 110 at best. So now your gap is higher than what you can sell for. You have to find subsidy for $200,000, and this is just approximates, you know. So to your point that you were saying before, I think it was you that said that all of the, or maybe it was you, the monies from CDBE and the small pots that we do get need to be distributed to people that are actually doing the job, you know, and not, I mean, it has to be well, you know, attributed.
So one way to think about this is if you give yourselves permission to weigh in on one side of the problem, our recommendation would be obligate yourselves to also do work on the other side at the same time, right? Mm-hmm. And so if you're going to be in a particular area of the city and you're aiming to cure, address, make progress on the affordability side, give attention to the market side. If you're there to strengthen a block or a series of blocks, don't do so without giving attention to the affordability, right? In the right proportions, right? And those proportions will change depending on the geography of the city, right? If there is, and I'm not going to backtrack on what I said earlier so much as I think refine the point, if there is a workaround, you're likely to find it in scale, okay? Which is to say, when a project is of a sufficient scale, 60, 80, 100 parcels assembled, okay, for pretty significant redevelopment, the big numbers begin to give you some opportunity to be on both the affordability and market side at the same time. Mm-hmm. The smaller the intervention, the less maneuvering room you have.
Yeah.
Right? So if you've got 4 blocks together, right, and in those 4 blocks, you know, you've got 61 houses that you're working with in some strategic fashion, you're likely to be able to carve out some maneuvering room, right, that on the financing. Right. So, one, be thinking both and, not either or. Mm-hmm. And second, be thinking go bigger. Right. Bigger when you can.
And I also see it as a puzzle, right? So you can't just focus on 1 or 2 pieces. You really have to look at all 20.
Exactly.
And you have to share the wealth and work on it from that perspective.
And to make it a destination, you know, you need to have then, I mean, you're building homes, but then for people to come and live in these homes, you need to have the things that every community would have, a supermarket, gas stations, good parks to be in, you know, and do your things, you know. It has to be like holistic, like I think you were saying that, right, before.
Yeah, I think a key part of if you're getting it right, if you're getting that balance right, kind of the second and third part of the of part 2 of the document lays out some recommended outcomes that you'll want to be tracking, and a core outcome for the market gap is, you know, is your taxable assessed value rising? If you're making the smart plays on the market side of things, you should see that value rising, and that is so critical if you want to be kind of creating value to then invest in better parks, better streetscapes, to begin to have more resources to work with. If you're not seeing your taxable assessed value rise, and if your strategies as a collection of strategies aren't improving your tax base, you're not going to put yourself in a position to be growing that pie and doing more, going bigger, as Charles said. So that's I think for housing strategy, that's not an outcome that I think Syracuse or a lot of cities tend to sort of look at as a very pointed housing related outcome, but it's key. You're not going to have the resources or capability of doing more and serving more folks if you're not growing the city's tax base at the same time. And that'll also, if you're doing that, that'll indicate that you're being more competitive for those households that traditionally have been choosing your suburban communities in Onondaga County over the city. So if you're creating that desirability in your neighborhoods, you're sort of appealing to more households, your tax base is rising, your pie is enlarging, and you're able to sort of think more seriously about affordability gap issues at the same time as market gap issues. So it is very holistic. It's thinking big picture on everything.
Are there case studies of other communities that have done anything successfully on the scale you're talking about?
Yes, but I don't think it's so much yes, here's the city to point to that's done everything right. It's rather that setting aside the Sun Belt, right? And no city's not facing some version of what you're facing, right? And all cities have been now really in a 5 decades long experiment to try to react to urban contraction, right, and suburban competition with varying degrees of success. Right? But that, however, though there's not one place that you copy whole cloth, there are many places doing really successful things that you can and ought to readily steal from, right? North Philadelphia, just as an example, right, along Fishtown, it happened, you know, it's going to have lots and lots of examples of how you deal with small urban spaces that have resulted from decades of vacancy and demolition, right? You're going to find lots of redevelopment lessons from Boston. You're going to find, you know, I think creativity from dozens of places. Pittsburgh, Pete's home in Buffalo, that you can and ought to stitch together.
That's based on specific needs.
Yes, but very similar challenges, which is, you know, shrinking population over time, reduced reinvestment in real estate over time, the rise of slum landlords over time, a shrinking tax base, you know, so we're all kind of learning together, but yes, there's no shortage of something to get that you can stitch together with high probability of success. No question.
Just the last few slides I have here are just kind of further summaries of part 2. We give examples of recommended outcomes to be tracking on the affordability gap. We kind of offer 2 that we think are really key. you'd be making progress on your affordability gap over time if you see the share of households that are cost burden declining. So that's more important to track than, how many affordable housing units you're building, more important than how many housing vouchers are available. If you're looking at what share of your households are cost burdened, where is it now, where is it trending, you want to be thinking about how strategies can be fixated on that outcome and budging that outcome. And a big part of that will be simultaneously thinking about how can you have a declining share of residents in areas of extreme poverty in the city. A big part of that work is really thinking about how can Syracuse and really how can the region as a whole create more accessible, low-cost housing opportunities in areas where there's economic opportunity, so that households that are very low income, how can they have housing opportunities in areas that are whether it's within the city or even in some suburbs where they will have better access to jobs and to opportunities to lift the economic mobility of their families. You don't have enough of that in Syracuse, which is why you have areas of very high poverty where you have 40% or higher poverty rates.
And that's one thing that I feel like we can't control. Like, we can't control the will of the people. Like, there's always going to be poor people, no matter what we do. But we can try to eliminate some of it. But I'm still stuck on like the economic part of it, because I feel like even with Micron coming, we still don't have like a huge economic like driving force to get people better employed, to be able to, even if we build 100 new homes, like to be able to get some of the people out of extreme poverty now into like a job that they're actually making money and then be able to buy a house. It's just like some things we're not going to be able to control. And the will of the people to actually get out of poverty, some of them will never get out of poverty.
I actually think one of the things that stood out to me just in terms of data, as somebody that looks at this stuff a lot, that this really called out was the rate at which we're losing households making $35,000 to $50,000 a year. And if we think about kind of all of the investment that's going into workforce development and creating greater economic for opportunity, I think the will for people is like to figure it out is actually very high. Unfortunately, we don't have enough menu of options of housing available that are attractive for those folks. So if we're to assume that we will continue to be successful at all the work that we're doing to help people kind of level up in terms of access to the opportunity to higher paying jobs, if we just keep losing them to the suburbs because they can get a better quality product and still have it be affordable to them, like, is that really success, right? So I think that to your point of kind of like, what can we control? Like, we do have the ability to control what our menu of options are, I think, at a broader scale than what we're doing. Certainly there isn't a federal program for us to be able to do it efficiently. There's not a state program for us to be able to do it efficiently, but I think that there's room certainly for improvement, and there is a lot that we could accomplish probably with the just creating the local will amongst decision makers, right? So.
Yeah. I think one thing we found looking at historical census data is that at some point over the past 10 years or so, the number of lower income households in the suburbs surpassed the number of lower income households within the city of Syracuse. And in our open house last night on the north side, I was speaking to a young woman who works at a not-for-profit that serves the north side. And she confirmed kind of an observation that we had, that once a household reaches a certain income threshold, you're applying the different social services, you're helping a family kind of improve its economic condition, and they reach a certain point and they look for the suburbs. They're find me that 1955 Cape Cod in DeWitt that is within striking range for a household making 50 grand, and boom, they're gone. And so it can look like you're not actually making any progress in many city neighborhoods, or that households aren't making progress, and that kind of masks the underlying condition that some people are making progress, they disappear from the city's radar as soon as they improve.
Like a stair step. We're a
That's right.
stair step to the suburbs.
That's right, yeah.
And I think also as we talk about improving economic well-being, I mean, there's, as we alluded to earlier, that it's a multi-dimensional approach to be, when you talk about improving a city. As we talk about all of this, there's the other, element in which, I think you alluded to earlier about, a single family household versus two in a household to really help, two people who are making $30,000 who are living in two different houses. Obviously, two people who are making $30,000 and living in the same house are going to have different economic outcome than those, because they are sharing the burden of the cost.
That's right.
You see, and so when we talk about, helping our city becoming a stronger city, it's a holistic view of how do we strengthen folks to really start looking at the economic factor of stuff like that to be able to boost their own well-being. And like Councilor Allen said earlier, we can put all of these in, and also people would have to see it themselves. We can put in all the policies, all the research, but if people don't see it, really quantify it to their own benefit, it becomes challenging. Become challenging, and one of those is cost of housing, as you guys have alluded to. So we got a whole lot of work to do with a whole lot of different direction to take it into,
Yeah, no, I think you're right about one of, household size is something that's been shrinking in Syracuse for decades in most communities, and it's why you don't have as much vacant property here as you might otherwise have given the population loss, because you've gone from households having 3 people to 2.5 people to 2.1 people, and that's true that one of the challenges that comes with smaller households, especially the rise of just one-person households, is it sort of lowers your household purchasing, your purchasing power, what you can spend on rent. If in this region, housing costs here are so relatively low compared to the state and national context that 2 individuals each making $30,000, that doesn't sound like a lot, but you combine that, you get $60,000. You can your radius of what you can afford, that where you can go shopping, it becomes, you can go almost anywhere within Onondaga County. So that's an important part of understanding housing economics here.
Right. So we, like I said, we got work to do as a city in how we, we are dealing with poverty, and yes, it's great to have jobs, and so sometimes there's more strategy than just having a job to be able to deal with poverty. Job can't fix the poverty alone, because as wages increase, obviously everything else is going up. And it's like, I do this, I got to deal with this. So it's we got a lot to deal with.
Yeah, and it's a lot of it is creative problem solving. It's sort of thinking holistically, and it's recognizing that nothing is ever done. It's sort of adopting kind of strengthening a culture of like constant innovation and constant assessment of, okay, what are we doing, what's working, where is it working, and being able to sort of tinker and sort of know that, you're never finished. Every council is going to be facing a slightly different set of challenges to be working on. Staff will always be facing different challenges, and that it's sort of committing yourself to being able to innovate and be creative and thinking about things with a wider set of strategies and tools, which I think we're hoping that the study is putting the city in a position to have a good start to the strategy development process. I think that the last few slides I had were just just reiteration of a few final parts of the document. One item that you'll notice, I think I referred to it before, this is the market demand map that you'll see on page, let's see here, page 20 of the document that identifies different levels of demand throughout the city. We think that that's going to be a really critical map for thinking about what are the outcomes you're looking for in different parts of the city from a market standpoint, from an affordability standpoint. And that's a really crucial map for thinking about the right balance of those two categories of work. So I think with that, happy to take any other questions that you have about any of the content we've discussed or anything else on your minds about housing here.
Can you go back to that timeline slide that you had in the beginning? I can't remember, the last two bubbles, I think, was draft and then
Right there.
final. So we're at it. Okay. It's the end.
So I think that's probably a good segue. We've been pretty clear all along throughout this process that we're committed to kind of building out what the strategy looks like. I think we were pretty intentional about separating it into a multi-part process, kind of understanding it's a lot to wrap your head around, all of the numbers, and it's a lot to wrap your head around the kind of magnitude of resources associated with it. So what we were really trying to accomplish for this stage was to really just get an understanding of, based on the current state of the data, what does the data say objectively? Based on that, what are the kind of key principles that we need to make sure we are following for whatever we're doing next? We are planning to come before the council probably within the next couple weeks to ask for authorization to extend this current project that we have to do a second phase, where we would be looking to kind of develop some of that more prescriptive, here's what a strategy looks like, here's how we would want to think about applying it. And so kind of to the point of a timeline, I think we would be looking, ideally, if the council were to approve, we would look to begin kind of later in the summer and then carry that work on through early spring of next year.
Okay. All right, well, thank you guys. This was very insightful. And it also, I guess it just gives us something to look forward to, but knowing that we got a lot of work to do just across the board as a city, as city councilors, and just the work that we do within the community. So thank you guys, I appreciate it.
Will you formally share this with Planning Commission and BZA and all the other?
At this point, we don't have a formal presentation scheduled to those groups, but it's certainly something that after the fact, if it was of interest, that we could organize. So,
How was the meeting last night?
we had a really great turnout. Councilor Schultz was there, so she can also weigh in, but I was pleased with the number of attendees we had. We probably had at least 35 or 40. And again, much like some of the ones that we had at the halfway point, I would say it was not necessarily all people that I would consider regulars for your neighborhood meeting crowd. So I think that's certainly encouraging and really speaks to just how important this is for kind of the full spectrum of the community.
Okay, good. One of the questions I had from social media, they asked, are the meetings live streamed?
So those were more kind of informal open houses for the public meetings. We do have all of the content that was presented is available online, SyracuseHousingStudy.com, that people can go and kind of check out there. There's opportunities within there for people to ask questions or make comments about it, and then we can kind of use that as something that we'd be looking to follow up on subsequently. Really, we wanted to just kind of create an opportunity for people at this point to just kind of come in, ask questions, tell us what they think, and not necessarily to do this level of kind of like talking at you sort of thing.
Will you post those comments from the public somewhere at some point? I know last night you were using sticky notes for people to.
Yeah, we can. Yeah, certainly we'd be looking to kind of bake that into what we would be doing for subsequent implementation.
Okay. All right. Well, no further questions. All right. Thank you, guys.
Thank you all.
Thank you.
I feel like we gotta get our shit together. Well, y'all do.